In this video, I'll go through what index funds are. An index is an indicator of something, such as technology stocks or the top performing companies in the market. So an index fund is when you invest money into a specific segment of the market. In the US, we have three famous indexes known as the Dow Jones, Nasdaq Composite, and the S&P 500. The Dow Jones was created in November 1882 and consists of 30 large companies in the US market. Currently, companies such as Apple and McDonald's are on this index, though the index does change over time. In 1885, the Dow Jones Index had 39.29 points, where points are the total sum of the stock price of all companies in the index. In 2019, the index has 28,538 points. So if you had invested $100 from 1885 and sold in 2019, you'd now have $72,534. The Dow does get criticism as it only has 30 companies, which is not seen as a representation of the overall health of the market. The Nasdaq Composite was created in 1971 and consists of 2,500 stocks, heavily weighted towards technology stocks. Some big names include Microsoft, Amazon, and Google. When it was created, the Nasdaq Composite had a value of just 100 and now has a value of 9,369 points. If you had invested $100 in 1971, you would get $9,269 if you sold now. The S&P 500 was created in 1957 and consists of 505 stocks issued by 500 companies, which are selected by a committee. Big names like Apple, Amazon are in there. In 1957, the S&P 500 was 386.36 points, compared to 3,029 today. That means if you had invested $100, you would now have $684. This isn't as high of a return as the Dow or Nasdaq, but it's still very impressive, and the S&P is seen as a good representation of the US market. What this shows is that index funds are a great way to get exposure to the best companies in the market, and you could get some very good returns over a long period of time if you continually invest into it. To get exposure to this, you can sign up to an online brokerage firm which allows you to buy and sell a variety of financial assets. You should be able to find ETFs which track the price of the index you want, where an ETF is an exchange-traded fund. By investing in this over a long period of time, you can expect to see your income grow substantially. In the next video, we will look at stocks and how their prices are determined.